Guten Tag. All right, so basically what I was saying was after a few people didn't have good luck on their challenge accounts, or really what Terrence was saying, like he's not going to open up another challenge account until he proves to himself that he can do it in demo over and over. And I think he hit on something. So if you've blown an account lately, or even if you haven't tried to open a funded account, or you haven't tried to get funded, but you think you might be getting there, um, I want to show you something. In a demo account, if you set up a $5,000 demo, right? Um, use 1 to 100 leverage. It doesn't matter if it's MT4, MT5. Uh, the reason I say a 5K account is because my Forex funds has a $49 5K account, right? And I think most people who we meet with here can afford a $49 account when they're ready, right? But make sure the leverage is 1 to 100. And I would like to be the person to call out the trades, all right? And the same way we pick trades now is the same way that I want to trade the demo. But here's the one exception. You can only use a 0.01 lot size, right? You can only use a 0.01 lot size to take the trade that I call out, or that we talk about that week, okay? And I know with a 1,000% certainty, nobody will blow that account.
Wait, so only a 0.01 one position, or multiple positions, just
Oh,
0.01?
that's a great question, Kenya. That's a great question. So everybody's trading plan should answer that for them, right? But for this challenge's purpose, you'll have two open. You can have two open positions, or two positions at risk at any given time, right? Do you understand what that means? The crickets.
Maybe you can elaborate.
All right. If you're in a trade and that trade is in profit, and you move your stop loss up to break even, that position is no longer at risk. But if you have a stop loss, and if that trade hits the stop loss and you would lose money, that position is an at-risk position. So you can only have two open positions that are at-risk positions. Does everybody understand that?
Yes.
If you don't understand that, please type a 2 in the chat. I mean, this is the time that we should be discussing things that you don't understand, but I always get the crickets.
Ooh.
Okay, there's a 2 in the chat. So whenever you take a trade, most people take a trade with a stop loss, right? If the trade hits this stop loss, it's going to get me out of the trade, correct? If you take a trade and it goes back and hits your stop loss and you lose money, that is an at-risk position. If you take a trade and the trade goes into profit, and you're able to move your stop loss to at least break even, which means if the trade comes back and hits your stop loss, you'll either make a little profit or you'll break even. You won't lose any money. That's considered a position that is not at risk. You understand that, Alisha?
Yes.
Okay, so if you have two positions that are at risk, which means that if your stop loss is hit, you're going to lose money. You can't take any more position. You can't take any more trades. You can't add positions until one of those positions is not at risk. Does everybody understand that?
Yes.
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 Okay, so does everybody want to participate? Or who wants to participate? Drop a 1 if you want to participate.
Did you answer Selena's question? Are we hedging?
Listen, you can hedge. I mean, you know, y'all know I'm a hedger. You can, this is a demo account. All I'm saying in this demo, you need to trade the demo like it's your real account, because what I show you, you will be able to take back and apply this, right? For the most part, we get ourselves in trouble in 2 different ways, right? And here's another kicker. We'll talk about that in a minute, but for the most part, there are 2 reasons why we get in trouble as traders, right? The first reason is because the lot size is too damn big, period. It's just too big. And the second reason is we have too many trades, too many at-risk positions. If we can eliminate those 2 reasons, accounts will not get blown, period. Period. Now, here's what I need for you guys to understand. The demo account is only good if you treat it like a real account, okay? And in a real account, when you lose that week, you have to talk about, you have to address why you lost. It's not as simple as, okay, I took a trade, it went against. Why did it go against you? Why did you take that trade? What happened? How many of you guys do that every week? Right? So here's what I mean. If you take a trade and you lost, and I ask you why you lost your trade, and you say, oh, you know, I revenge traded. That's cool the first time you say that. But you can't have 5 revenge losses every week. That's a lie. I mean, you're not revenge trading. You're retarded. Like you have a problem taking trades. Revenge trading has to be eliminated. You can't be paying for accounts and taking revenge trades. That is a problem. You understand what I'm saying? Like, you're not ready for an account. So if you have 2 weeks in a row where you've taken revenge trade, you're obviously not ready for an account. And I'll just equate this to relationships. You know, those of you who have ever been cheated on, and you've decided to take your partner back, if they cheated the next week, what would your response be? And if your response is anything except for you'll forgive them, then, you know, you're lying to yourself in your trading account, because you need to treat it the same way. This is your money, and you're never, ever going to be successful. I'm not going to say never, ever, but you're light years away from being successful because you have no discipline, right? And if you understand the fact that you have no discipline, why are you wasting your money? I mean, you're here for a social experience, which is fine, but just do that in your demo and save your money. So if you're serious about becoming funded, or you're serious about making money on a regular basis, take this challenge right here. Get in your demo. You're only going to use a 0.01. It's going to be slower and maybe a little bit more painful, but we can creep up the lot sizes maybe week by week if you find a level of success. But you can't do it if you're revenge trading. You can't do it if you're impulse trading. You can't do it if you're, oh, I see something happening on this pair, and you know, that's impulse trading, man. That's not helping you. That's hurting you. So how many of you study your losers every week? Drop a 2 in the chat if you study your losers every week. And here's the quote unquote funny thing is on on Sundays we had a beginners class. And then once the beginners class was over, you know, we said, hey man, we can use this as a loss review. And once somebody has hit me up saying that they wanted to review losses. And I'm not saying you have to discuss your losses with me. Maybe you have somebody else that you can discuss your losses with. But if you've taken losses and you don't understand why you've taken your losses, you have to discuss it with somebody. And really, you should probably discuss it with somebody anyway, you know, because you need to feel a little embarrassment or a little shame, you know, when you discuss these losses. It shouldn't be something that's done in the dark, because that's not going to help you. If you're discussing your losses with your trading partner or somebody, you know, you're cool with, y'all need to be candid, you know, and tell each other what the real deal. You know, if Alisha and Selena are trading buddies, I mean, you got to ask tough questions about the losses. Well, why did you take that trade, Selena? Or why did you take that trade, Felicia? Oh, girl, I revenge traded again. Again? I mean, the same way y'all would ask each other about your partners, about the men or about the women, you know, in your lives. Man, they did that to you again, and you still with them? Or you know, you still friends, or you know, you still gonna let them borrow money? These are real scenarios that are gonna make or break you as a trader. Are you here to become a good trader? Or are you here for the social experience? And I don't mind if you guys are here for the social experience. Just don't spend your money on it, you know? But if you're here to become a good trader, there are some adjustments that we all have to make, right? And you know, I really thought long and hard about this, and you know, I watch videos every week, and there are a few podcasts, or there are actually two that I really follow: The Trading Nut, and there's this other one with this guy named ETN. But to make a long story short, I've heard 3 different traders talk about how they began their journey, and the thing that resonated with me, and you know, I didn't know this because I just did what I did, right? But the thing that resonated with me is they all said they shut down outside activity, which means like Netflix, video gaming, whatever they were doing in their life at that time. They closed themselves off to just trading. And that resonated with me because that's the same thing I did. But most of those other guys, they sold things. They sold their gaming system. They sold their fishing gear or scuba gear, whatever they were doing, they sold that stuff, right? They sold it to raise their capital, right? We don't necessarily have to do that because we have funding options nowadays, but they sold their trinkets and their toys to raise money so they can have in their trading account. And the third thing that they did was they all got mentors, right? They had people who could advise them, you know, to shorten their training journey, right? They all documented their journey, you know, and they did that in the form of a journal, right? We talked about journaling last week. It's super important for you to journal so you can understand what you're going through as a trader, and you can understand from week to week. You know, maybe you have emotions that are getting in the way. Maybe you have things that happen to you that week at work, and you shouldn't trade this week. But unless you journal, that stuff isn't going to hit you immediately, right? Maybe it'll hit you over a course of time when you're reading back over your journal. Those things are important for beginners when they start trading, okay? But make sure you are taking something, you know, from this experience, okay? Another thing they did, they all had a strategy, right? And they didn't make the strategy up. They got the strategy probably from mentors or from somewhere, right? Once they got the strategy, they had to basically study the strategy to make sure they could at least say it out loud, right? And here's what I want each of you to do. Do you guys have a strategy, right? So do you have a go-to? When you start trading, you can't have several different things that you're doing. You need to find out something you can do that works over and over, right? So if you're trading retracements, all right, you're waiting until you see a wick on the candle, you throw the fib on it, you take the trade from where it is to maybe the 38.2 or the 50%, whatever your strategy is. It needs to be a strategy that you can repeat and you know what you're looking for every week. When you hit the charts, I'm only looking for this, right? So if you're a swing trader and you trading, with me, you go into the weekly chart. I need a weekly order block every week. That's my strategy. That's my go-to, right? And then you talk yourself. Can you talk yourself through the trade? Okay, the first thing I'm going to do when the market opens, I'm going to, buy the retracement or sell the retracement, and then I'm going to wait for the reversal and then I'll get in the actual trade that week. This needs to be hammered out. Like, it's not a question of if you're going to do it. You already know this. Bam, bam. This has to be what you do. This is your strategy. This is your go-to. And you just take those trades with clockwork. So mentally, you know what you're doing, right? Because once the market starts, the market might do something different and it shakes your mental state. It changes your mental state. So you need to have this playbook in your head that you mentally, you've already went through what you're going to do. You need to know the pip count of your hedge or your stop loss, right? So when I take this trade setup, if I'm using a 0.01 lot size, maybe I can let it run 60 pips against me before my hedge kicked in or before my stop loss takes me out. Maybe I can let it run 70 pips. It doesn't, whatever you have, right? Whatever your strategy is, that needs to be in stone. Like, you need to, if I ask you about it, you need to be able to regurgitate that like that. This is what I would do. This is what I would do. This is what I would do, right? And once you have that, that lets me know, and more importantly, it lets you know that you understand the process, all right? So what is the process? The process is every Saturday I come and I look at my charts, or Sunday I come and look at my charts. Whenever your time is set aside for, all right, I'm going to look for this particular setup every Saturday or every Sunday. Once I see the setup, then I will mark this chart up. So what I'm looking for is my entry. This is what I'm going to enter. I'm going to buy the retracement up to sell it, to sell this back down, right? Or I'm going to sell this retracement down to buy this back up based on the order block. That's automatically known. When I enter this trade, I'm automatically going to have a, X number of pip stop loss, right? I'm going to mark up all the imbalances or all the order blocks that might become an issue along the journey of this price. That should be your go-to. You understand the process, right? Once you understand the process, right, and you start executing the process, now you're able to break down your trades at the end of the week. Hey, why did I lose this trade? The market went against me. Why did it go against me? We got some bad news, right? Fundamentals are always going to play or come into play when you trade. So if you lose a trade because of fundamentals, that's cool. That's going to happen to everybody at some point, right? The fundamentals are going to go against them. You might lose a trade. But if the fundamentals don't go against you, you should not lose your trade based on the technicals, because that's where we come in and our process weeds out the technicals. The technicals are either going to align with us or they're not. And our job is to make sure that the technicals on the chart are aligned with what we're looking for. That's all we're here for. That's why we analyze the charts, is for the technical information. So if you are good with analyzing your technicals, you won't lose trades based on technicals. You're going to lose trades when the fundamentals come into play, and that's cool. But we just need to make sure that we're protecting ourselves against those fundamentals by going and seeing when the news events are. Hey, can I hold this trade through the news events, or do I want to shut down in profit, right? These should be rules in your trading plan that says, okay, if I'm in profit, I'm going to either tighten up my stop loss, or I'm going to close my trade out until after, these technicals. Or if I'm losing a trade, maybe I will tighten up my stop loss, but maybe the technicals will push the trade towards the winner, whatever the case may be. There's no right or wrong answer. There's just your answer. But you have to understand that. That's part of your process. That's going to bring a level of consistency to what you're doing as a trader, right? And then if you lose the trade, you say, man, it was a calculated risk based on my trading plan. And that's fine, because none of us are going to win every trade. But if you don't have a technical or a plan that you can execute every time, then it's going to screw you up, in the long run. You're not going to have a process that's airtight. You need an airtight process. And once you can focus and understand your process, the money is going to follow. The money is going to follow because your process is trump tight. Your process is there. And all you're doing is repeating the process. My brother has like a favorite football coach. All he ever talked about was process, right? The process of the process. We're going to focus on the process. And it's funny and it gets old, but the process is really what's going to pay your bills. If your process is good, your money is going to be good. So you just have to get the process down to where it needs to be. All right. Now, the last thing you have to understand is the structure. Is market structure is everything in trading. It's everything. I don't care what kind of lipstick we put on it. The market structure in trading is everything. And if you don't understand market structure as a trader, I have problems believing that you're going to find success. Okay. All right, USD CAD. I just want to look at something and kind of show you what I mean. If we squeeze this weekly chart in, first of all, most people, when they trade, probably never look at a weekly chart, or, they'll look at whatever time frame, maybe 1 or 2 time frames above. But when you squeeze this chart in and you look and you understand, okay, we're here, but everything important to me is over here, right? It's not over here. Everything important is over here to the left. And the most important things are the recent activity, more recent activities to the left, okay? But this is really all I need to know. I need to know from April 2015, right? That's a lot of years ago. But if I squeeze this chart together, I immediately see that the market is not going below this level right here. So when price pushes down to this level, once it bounced, man, I can put it in stone that I'm not going to trade past this level, right? I mean, it ain't been past this level in so many years. So the only place the market had to go at this point is up. So I have to understand as a trader that my trades, I need to be in longs, right? And then just pay attention to the fundamentals as the market pushes up, right? It doesn't matter if on the 4 hour there's the pair is selling, right? Now, if you are selling it on the 4 hour, you got to pay attention to, to the range that you can sell it down to. So if the market is at one of these high areas and you're selling it down, like, okay, I can sell it down, but I'm not silly. I think that there's going to be a higher low created. So when I sell this down, I can't expect to sell it to equal lows. I have to be smart about it. And I have to understand that I'm probably trading against a trend. So when we come to these types of scenarios, we have to understand structure and look to the left. Our structure points will be to the left, right? There's a lot of range in here, like from this high here to this low is probably 2,200 pips. There's a lot of range in here, but we just have to understand that, hey, man, we need to be trading this up. We might not ever trade up to the top of this range. Maybe it'll just come up, you know, halfway. Maybe I can throw a fib on here. And I know I'm not placing, let me bring the screen down so I can place it properly. I don't want y'all to be turned off by the way I threw my fib on here. So maybe I throw the fib on this chart and I just take this trade up to the 50%. The 50% mark is up here, right? So maybe I'm trading up and I got to pay attention when it gets here. Or maybe I think it's going to go higher to the 78%. But that's a lot of pips over the course of time. So you're cognizant of these things as a trader, and then you're just paying attention to the fundamentals. What is the US dollar doing? What is the Canadian dollar doing? You go to investing.com, you look for the news, you know, every week, all the time, right? And then you're able to take these trades with a bit more confidence. And you have a backstory to why you believe what you believe, okay? It's not important to me, you know, per se, why you believe what you believe at that given time, but you as a trader, you need to have a story that you're following, you know, when you're trading, right? It can't just be, okay, I saw a bearish order block on the 4 hour. Okay, you know, that's cool. But yeah, is it a real bearish order block or is it just a retracement, you know, to the moving average and it's going to keep going a certain direction? So these things are going to help you as a trader. And these things are going to help you come up with a story that you can follow and you can trade with, right? That process is going to tie in a theme for your trading, right? You'll be able to say, okay, I'm gonna take this pair to this level, right? There are key levels in the market that you'll be able to see when you start looking to the left.
Hi, we lost your screen share.
Yeah, I took it off because I don't
my-
want you just looking at the screen. I want you to listen to what I'm saying. The key levels on the charts you'll find to the left. And over time, you'll understand, okay, this pair has ranged between these two levels. And now you're kind of biased, you know, towards how that pair moves, right? That's what gives you your bias. And you don't necessarily have to be married to a pair. I know people preach that, but if you understand the fundamentals behind why your pair is moving, then you can trade whatever, right? Like last week we traded, or we were looking for the dollar to make a move. It didn't make the move. I switched right to the pound, you know, and got what I needed. Everybody is capable of doing that same thing because the fundamentals are there for all of us. All we have to do is go and look at what the reports are saying. Does anybody know the news events coming up this week? Off the top of their head.
I do.
Who is I do?
Desiree.
Oh, there's what's the news events coming up?
We've got, of course, unemployment claims coming again. Powell is speaking at 10 o'clock, I think, on Wednesday.
I think it's yeah.
Huh?
But so what's going on Wednesday and Thursday?
I said Powell is speaking, I think, on Wednesday, and unemployment claims. I don't think CPI is coming out, but I look at it every morning. But
right. So listen, if y'all don't understand what Jackson Hole is, like everybody who trades Forex and you're trading the dollar or anything against the dollar, you gotta know about Jackson Hole, Wyoming. You know, I mean, if you Kanye West fans, you know about Jackson Hole, Wyoming. So you got to understand like the events that are going to shape the move for the next month.
So the very wealthy people are going to meet and decide what they're going to do with our money.
Yeah, like your not only your Fed, but it's going to be Fed people from all over the world. You know, they're going to come to Jackson Hole, Wyoming, and they're going to establish their monetary policy. You know, and a lot of their monetary policy is going to be based off what the U.S. is doing with their monetary policy, right? So the U.S. is the #1 economy, and it's the hottest economy. But the Fed needs to decide whether they're going to keep pressing the interest rate thing or whether they're going to taper off right now, because the economy, you know, showed signs of cracks or whatever, you know, like as far as the CPI report. But this is going to be very important. If, you know, it doesn't matter if you trade in pairs or indices, it's going to be important for all of us. And if you don't know that going into the week, you might get caught with your pants down, you know, like, and it's going to hurt, because if Powell goes in there and he's hawkish, like I want him to be, I want Powell to go in there and say, man, you know, we can't take that 75-point rate hike off the table, because I want the dollar to keep going up. I believe it's going to keep going up. And if Fed Powell says that, those indices are going to crumble, man. It's going to be like Hiroshima hit them jokers. Then we might get the sell-off that I've been desperately desiring. I'd rather Powell do that than the economy crash, and that's how the indices crumble. But if he's more dovish, if he's you know, I don't know, you know, we want to wait and see, then the indices are going to be bullish, and they might just shoot up, but the dollar is going to suffer. You have to understand that going in, because if you're in a trade and you don't understand that, and he has his speech, you know, and you're doing hair or you're shopping or you're doing something, you're going to get hurt, you know, when the market reacts to it, because it's going to react violently. But even if you're in a trade and you do understand that, then maybe you're just watching your phone close whenever he starts speaking. But this is going to set the tone, not just for next week, but for the next several weeks, because the Fed can say what they want to say, but they gotta crap or get off the pot, you know, on September 23rd when they actually raise the rates. So they're either going to raise them modestly or they're going to raise them, you know, that 75 basis points. So you got to understand the news events that are coming out. And if you don't understand, just ask, man. Like somebody in our group is going to understand the news events. And if you don't get your answer, ask, please. Like, we don't know if you don't know. Like, we don't know that you don't know. And if you never bring your questions to the forefront of this free group, it's free. If you never ask a free group, then shame on you, and you deserve what you get, you know, because this is absolutely free. The only thing this group costs you is time. But everything that we know in the group, we try to give out, but we won't know to give if you don't ever ask, right? So study your structure. Is to the left of the chart. Pay attention to the news events that could change the direction of the pair you're trading, right? Think through each scenario. If this happens, then I'm going to do this. If this happens, I'm going to do this. Do you have all the answers to those scenarios? Do you need to ask? That's important. Because if you don't have the answers and you need to ask, then maybe you should ask before you take the trade. And let's say you take the trade and then something comes up that you remember or you think about that you didn't think about before you take the trade. You can always ask while that trade is running. Okay, I don't want to lecture y'all. That, you know, that's really not the point. But the point is, if you have a tight process, you're going to make money, period, right? Most people's problem comes with lot sizes. And it comes with impulse. You know, you're pissed off because you got, you know, taken out of a trade or the market went against you, so you impulse trade. You can't do that and expect to make money. I want everybody to be able to make money. So I want to be able to cut out a lot of the bad stuff that we're doing and be able to replace the bad juju with good habits. You guys have any questions? Does everybody know what Jackson Hole Symposium is? That's what's
I
going
do
on.
not.
No.
Okay,
don't.
I can read it if you want.
there you go. Please, Des.
The Economic Policy Summit held in Jackson Hole, Wyoming is attended by central banks, finance ministers, academics, and financial market participants from around the world. The meetings are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central banks and other influential officials can create significant market volatility.
Yeah, I would like to replace that can to will.
Okay.
It is going to be violent and volatile. It's going to happen, especially this year.
And I will put that in the group so everybody can read it.
Yeah, like this is, everybody has to know. And I want you to take notice that she didn't say the US. She said from around the world. That means whatever you're trading is going to be affected. So I don't want y'all to be mistaken and think that that it's not. Okay. If you're trading with Will's group, I dropped something with Will this morning about, it was saying about, the Fed Powell, when Fed Powell speaks, it's going to affect those indices. Okay. So please understand that those reporters and everybody, every financial expert, and I do that in air quotes, is going to try to glean something from his speech. I mean, he's not dumb, he knows that. So he's going to craft his words carefully. And if it's the same Fed Powell, he's probably going to give a little bit to each side. But the market is going to jerk as he speaks. And they want to understand, the investors want to understand if he's hawkish or dovish. And if he's hawkish, the indices are going to sell off and the dollar is going to get stronger. If he's dovish, the indices are going to get stronger and the dollar will sell off. I think we all saw that last week. So if you don't understand hawkish and dovish, Google those terms. Hawkish means we're aggressively increasing interest rates. Dovish means we want to loosen financial policy. If you don't understand tighten and loosen, Google it. Or ask somebody. I would ask somebody and Google it, But these are important terms if we're going to trade Forex. It's important that we understand how that affects the pairs that we trade. I'm going to trade this week, but I'll probably, there's not even probably to it. I will be closed out, when Fed Powell gets on that mic, because I don't know, I don't know what to expect either. And I don't care about missing the initial move, as long as he's hawkish, I'll be able to get in and catch some pips. And if he's dovish, I'll still be able to get in for the opposite direction and catch some pips. Because mentally, I'm already thinking of the scenarios. And this is what I mean. Like mentally, you have to be able to process, if this, then I'll do this. If that, then I'll do this. If you can't do that, or if you're not doing that, it's going to be difficult for you to make money consistently. So, if you guys are interested, create that 5K demo, 1 to 100 leverage. And we'll talk about it. Now I'll call the trades out that we'll take. We'll talk through the trades. I'll explain to you how I'm going to take the trade, and you can trade that same way. The kicker is you'll just be able to use a 0.01 lot size versus calculating your lot size, okay? And we'll start doing that tomorrow whenever we meet to go over to break down the pairs. So if you're interested in that, you know, tomorrow at 11, we'll analyze the pairs and we'll pick out what we're doing. And I'll probably drop it. There's no problem. I will drop it in the Swing Traders folder. In the Swing Traders folder, there's a case study on UJ. I'm going to put together another one on UF and probably USD CAD, but those case studies are so you can see and understand what I am looking at whenever I look at the pair and what I expect to happen. So it kind of allows you to follow through or follow the trade by even if you're not taking the trade, you can understand what I'm looking at and where I think it's going there, why I think it's going, and what I expect the pair to do. Sometimes that provides you with a little insight or a little extra, even after you hear the analysis on the weekend, but you actually see how the trade moves and then what I expect, or, you know, if it did what I thought it was going to do, or whatever the case may be. And, you know, just look out for the live trading. You know, whenever a pair is moving, I'm going to get on Zoom and we can trade it live. All right. You're not guaranteed to win these trades when we trade live, but you'll understand what we're looking for. Okay. And you'll understand how I hedge, you know, where I'm going to place my hedge, all that stuff. We'll just talk about it and we'll do it. You guys have any questions?
I do. Is there gonna be like a profit target for this 5K account?
Well, the profit target is to make the 10%. That would qualify the 5K account. Now, the time frame may be a little different. We'll still work with the 30-day, right? The 30-day challenge. The difference is on the 30-day challenge, you guys, they don't control your lot size, right? But in this case, we're going to control the lot size. I still think we can get to the profit target.
Would the
Okay.
hedge be considered as one of our at-risk positions or no?
Well, a hedge is your stop loss, so no. But, you know, at some point, like if the trade goes against you and you flip, then your hedge will be considered an at-risk position. There are scenarios that it can turn into a at-risk position. But we'll talk about all those before we take the trade. Any other questions?
Yes. Can I just make sure that I understand? This challenge is just a regular demo account or actually buying?
No, we're not buying. Yeah, it's a regular demo account. I don't want you to buy anything. I just want you to set up a demo account. I don't care if it's MT4 or MT5. The leverage is 1 to 100, the same way it would be in a challenge account.
Okay, and the account size should be 5K.
5K.
Okay.
So basically, what you're doing is helping people prove the concepts of what you're doing and helping them build confidence, correct?
That's exactly what I want to do, is to show you that this actually works. And to prove to people, or I want people to see that it's the lot size and the strategy that they're using that's backfiring. A lot of times when people pick a strategy, the strategy is a good strategy, but the process that they use is a bad process, right? Because you have to go through the process every time. The process is what generates the money. But if you don't think through that process, or you don't evaluate every level of that strategy, you're going to blow your account. You need to understand what you would do if the price reverses. You need to understand where your stop loss is going to be. You need to understand all that stuff. And if you skip a step, trust me, the market is going to throw the scenario at you, that week. That's how you end up in revenge trades, because you didn't think it through and you got pissed off, because the market wicked you out of the trade. So this is just to show you a strategy that works and a process that works.
One more time on the news. So typically when the Fed raises interest rates, you said that the stock market normally reacts up. Dollar goes down.
No. So
Backwards.
it's the opposite.
Gotcha. Okay.
And this is a general comment, right? I like to use the term in a vacuum. So if there's nothing else at play, right? If there's nothing else at play in the market, anytime the Fed or any central bank, it's not just the Fed is our central bank in the US. But if we're talking about the Reserve Bank of Australia or the European Central Bank or whatever, any central bank, when you raise interest rates, your currency is going to get stronger, right? That's how it works. Your equities market, the equities, is going to get weaker because it costs more to borrow money. And equities depend on borrowing money, right? Most businesses aren't solvent. They borrow money to operate, and then they make money and they repay their debt or whatever, But if it's more expensive, if it becomes more expensive to borrow money, then the value of those businesses are going to decrease, because it's not worth borrowing money and paying back at a higher interest rate, right? And it also hurts jobs, right? Because most companies have to lay off because they can't afford, they can't afford the personnel. Any other questions? Y'all sure?
Hi, I'm sorry. I just have a question. I want to do the challenge, but are you going to be giving out trade signals, or I'm sorry, I missed some of it.
Okay, yeah, no, I will never ever give out a signal.
Okay.
But I am going to call out the trade, and here's what I mean. When we meet tomorrow or whatever, right? We're going to discuss the pairs with they have order blocks, right? Now, I'm going to tell you which ones that I'm going to take, but everybody has an option to take one of those trades with the order blocks, right? Now, I'm going to tell you how to trade it though. If you, for instance, let me just pull up a trade that I know has an order block, or a pair that I know has an order block. I don't necessarily want to use USD CAD, but we'll use it. I don't want to use USD CAD because I don't want somebody to get PTSD.
And you swing your trade.
Yeah, we're gonna swing it.
Okay.
Because I know that works. Look at I'm sorry, King. So this is a pair that has a bullish order block for the coming week, right? Which means we expect this pair to buy, right? But before it buys, we expect for it to sell down a little bit before it buys to go up. So if you take this, if this is one of the pair that you choose to take next week on Sunday when the market opens, you're going to sell it first. You're going to sell it until it starts to buy, and then you're going to buy it, right? Now, every pair will be affected by the news, you know, when the Fed speaks. So we're all going to have to close out the trade before Powell gets on that mic. That's going to be a requirement for the group. But after he gets on the group, I'll drop another, you know, another message to get back in your trade. Does that make sense?
Yes, it does.
Any other questions? Comments? All right, good people. I appreciate y'all's time. I've been trying to keep these down to an hour because everybody doesn't have time to watch it. And then when they see a long Zoom, they're not going to watch it. So you guys can always hit me up if y'all need something more, but we'll get back tomorrow at 11 to break down these pair that we're looking at for next week, analyze the market a little bit. We'll talk about news a little bit further. And, you know, as usual, you know, I appreciate y'all's time.
Thank you.
All right, y'all have a good one.
Thanks,
Thank you, bye.